Darin Newsom from DTN is our corn and soybean market analyst this week. The USDA released its latest world agricultural supply and demand estimates Tuesday. The agency lowered corn ending stocks 50 million bushels by increasing exports. It also reduced corn use in ethanol 50 million bushels, but countered that by upping feed and residual use the same amount. The USDA left soybean ending stocks alone and made no changes in output in Argentina or Brazil. We talked with Darin at the Triumph of Ag Expo in Omaha Wednesday morning and started by asking which numbers were important from Tuesday's report.
If I'm looking at any of the numbers, in large, March reports don't usually hold much, and in my opinion, none of the USDA reports ever are that important. But if I'm looking at any set of numbers out of the March reports, probably be exports for all three grains. In corn, the USDA increased exports up to 1.8 billion bushels, despite the fact that we're still trailing the previous projection of 1.75. In soybeans, they left it unchanged at 1.79 billion. Again, we're running well ahead of pace in soybeans by about 8%, meaning that they could have adjusted anywhere from 150 to 160 million bushels up, and they didn't. So we'll see over time how those two play out. In wheat, we haven't hardly done anything all season long. We're running well behind expectations, and they left it alone at 900 million bushels, I think basically because USDA just simply didn't care about it at this point. So of all of the numbers out there, it was those three exports that I thought were the most interesting.
There are many analysts that are very bearish in soybeans right now. You are not one of those analysts. Tell me why.
I think it comes down to a quantity versus quality issue. Everyone's still talking about how huge this South American crop is, but we're hearing some quality problems. We saw that, a couple weeks ago, that there was this truck strike going on, and all of a sudden all the business stayed with the United States, pushed the market up. If this quality issue is real and if it's widespread, then after this 2 to 3 week period of interest in the South American crop, all of a sudden I think demand's going to come back to the United States for some higher quality soybeans until we run short. So I think that the market signals are out there. I think there could be some actual fundamentals behind these market signals indicating soybeans have put in a low, now could stabilize for a while and then start to work higher later this summer.
So that's a short-term view, but longer term, are you even bullish out that far?
Yeah, I'm even more bullish out that far. I think, in corn and soybeans in particular, we turned a bullish corner last fall. And so, I think there's some great potential still long-term in the soybean market. I think once we get through this time frame in here, maybe even into this summer, fall, we'll start to build some momentum in the soybean market, work higher into 2016.
So what's showing on the charts that leads you to that?
We saw a key technical signal that I like to look at. It's called a key reversal, and the longer term chart that you're looking at, so weekly is more important than the daily, and I like to look at the monthlies, and this is where I saw it. It was on the monthly charts, again, in both corn and soybeans. And so, when you see that sort of signal and when it's confirmed by other things that are going on in the market, some momentum indicators, and certainly in the case of soybeans by some bullish future spreads still, it indicates that, okay, this market's got some potential. All it needs is some time to really build some momentum, and that certainly seems to be what we're seeing in soybeans.
What prices are you looking at long term?
I wish I had a better memory where I could actually target prices.
Well, I thought it was around 13 that you had mentioned something.
I actually did, because if we look again at how far we fell from the previous highs to what we could get to, once we clear this 10 to 10.5 range and get up into the 11s and 11 and a quarter, something like that, and we're able to move through that, given the type of structure that we've got in the markets, the 12, 13s aren't out of the range long term. So maybe talking 1-2 years down the road.
What about corn? Are you as bullish in corn?
Not as bullish, but I think it was important that it was in corn market that we actually saw some of these changes begin first. Similar patterns on the long-term monthly charts last fall. And now as we head into the spring, early summer, it may be corn that actually takes the baton to move us higher, because I think we're going to see some short-term demand come back to the corn market, start to pull things up. And so longer term, I think we can get through the 4.5, maybe back up into the 5s, but more of a limited rally in the corn market just because of, U.S. likes to grow corn.
For those with old crop corn, what prices would look attractive?
If we can get back up to the old highs, and I always like to talk about the DTN National Corn Index, National Average Cash Price, if we can get it back up into the 380s, I think that's going to draw some attention. I know a lot of folks will be targeting that $4 cash corn mark if we can see that here this spring. The problem is you don't want to be the last one holding, because there's going to be a lot of corn moved over the course of the summer in anticipation of another fall harvest.
There are some big reports for people who look at those reports, I suppose, at the end of March. What are your expectations?
You know, to me, everyone's going to be talking about the prospective plantings. I don't really care. The numbers that I think I'm going to be looking at more is going to be the quarterly stocks numbers. That'll give us a good idea of what we've actually done with demand over the first half of the marketing year for both corn and soybeans. So I think, of more interest to me will be, have we moved more corn than what's being projected right now? Are soybeans running at a faster pace than what's projected right now? And that could be illuminated a little bit in the quarterly stocks report.